Well, Ira Epstein, and here we are with your Thursday, and this is the October 27th metal market wrap up, and this wrap up is for the time I'm looking at it right now, about 5:25 p.m. Central Time. We've just reopened in some of the markets. I wanted to get this out. The last trading day, by the way, tomorrow is Bitcoin, so keep that in the back of your mind. If you're trading the Oct, I've already moved my traders to the November. I think a time that we also no longer follow the Nov beans. I'll finish it up here, but I think a time to move to the January contract and look at that. If you'll notice the stock market taking a pretty good beating right now, it's not dramatically lower, but it's down. And what's happened is the other shoe has dropped. For the past week and a half or so, we have been watching as the earnings came out very good in the banks, and then we watched a number of industrial companies come out with good earnings. And I kept telling you, the one that you have to be careful of is the ones that would report this week, which were the tech. And tech company after tech company has got problems. They are seeing headwinds from the strong dollar. They are seeing people cutting back on the purchasing of advertising on sites. They are seeing, in the case of Apple, that the Apple 14, the Plus, not the Pro, is not selling well. It goes on and on. So you're getting hit in the aftermarket today on news like that. You saw Meta down, 28% today. So those are the stories that are going on. Now, please keep in the back of your mind that you are now, 3 business days away, 4 including tomorrow, the third, 4 business days, 3 trading days left before we hear what the Fed is going to do. It is widely anticipated and built into the market that there'll be a 75 basis point hike on November 2nd, and that the Fed conference will be one of hawkishness. The Fed is not ready to pivot. They don't have the data to pivot yet. If you watch today what Ms. Lagarde said, she followed what Fed Chair Powell did. They're data dependent. They need to see more data. They see that in Europe, for example, energy prices have slipped off their highs rather dramatically, especially nat gas prices. But that can be transitory, and you've got to make certain as to what's going on. And they're watching food costs and everything else. It's no different here. The fact that Amazon did so poorly today after market gives you an idea that the consumer is not expected to do well at Christmas, and that is the reason everybody's going after the dollar so fast. But when we come to the gold and we look at the chart, here's my problem in the gold market. Why would I want to be long going into the FOMC meeting in my head when so far each interest rate hike has dropped the value of the market? And if you take a look with me, and the reason that, you remember, I'm not in Chicago, I'm out of town right now doing these for you, so that's why you don't see my beautiful face. But you peaked out in this market as we started with the interest rate hikes. And until the market can say it's going up in the face of hikes and buys into the idea that, yes, we're going to get hikes, but they're going to get smaller and smaller in nature, and we're coming to the end, not the beginning of hikes, well, that is when the gold market might switch gears and get back over the 18-week average of closes, but not until then. When you come to the daily chart, it's the same thing. We're getting a bounce in a market, and I do realize the market's got a pattern of higher lows, higher highs, which is friendly. The market, though, has only rallied up and fought a battle at what I call the line in the sand, the 18-day average of closes, and hasn't been able to prove that it can stay over it in any manner at this point in time. In terms of Bollinger Bands, each time we've hit the lower band, we've bounced back to the 18-day average at least. You're sideways in them, which to me is a sign the market's not ready to go up or down. When I look at slow stochastics, and this to me, slow stochastics are super important. When you time, especially with what trends are doing, you get an idea where you're at. So the market is not bought out. I want to repeat that, not. A 54 reading is neutral. So if this market wanted to pick up and run and get up and over 1679.40, put on a strong close, it can move with that. Do I think it's got the capability to go very far? I don't at this point in time. Then we look at the gold-silver ratio. Well, as long as it keeps number 1 going down, number 2 staying under the 18-week average, it means you need fewer ounces of silver as this number goes lower to buy an ounce of gold. Therefore, silver would be stronger than gold. And you can see that you've run up into key resistance. First, you're overbought. Any reading over 70 is overbought. Second, you've got the 100-day average and the 18, 200's way up here, and you're narrowing in the Bollinger Bands. Okay, you're probably going to have more sideways action, is what this is saying. In the copper market, we are in an uptrend, but it has hit its objective. It is overbought. The way I teach charting with the enhanced Bollinger Band course, this is the spot to be out. Not bearish, but out of longs. In the platinum market, you are overbought over the upper band. Now, the market has successfully done something very interesting. I want you to take a look. You closed in the top part of the quadrant there. And today, you finished off in this market at 1967.40. Not quite the top quadrant. I wouldn't call it a breakout to the upside is what I'm saying. The way that I do it, it had to be in the top 25% of the market, and I don't view that. It is overbought, probably ready for a bit of a pullback in the marketplace. When we come to the palladium market, it's been in a downtrend, and it is embedded. So if you take a look here, both numbers are under 20, under 20, under 20. Getting a bounce. I told traders this morning that the pros are going to try to sell this market on a rally in my subscriber videos, and it looks to me like that is exactly what's occurring. And until you get a close over 21, you're at 14.94. Why not see this market try even lower prices? Last in the dollar index, you're caught in sideways action. You've gone to the upper band, you came down yesterday to the lower band, and today the market comes back and goes just a shade lower, reverses and closes back inside the bands. Is it a downtrend? It is. Has it hit its target? It has. So first, I am saying a downtrend. Number two, profit objective hit. I think the professional money went flat now this market in front of the FOMC report. You keep hearing me talk about Bollinger Bands, the enhanced version with it. I have a 13-chapter video series that you learn this with. Then in the mornings you get to see me do it. I reinforce it morning after morning for you, Monday through Friday, and before you know it, you start getting a full feel. By the way, when you buy that course, you get both my ETF and my futures market, 2 weeks of the subscriber videos absolutely free. If you're a subscriber, well, good news for you, because then you're buying the course at the right time to learn everything that goes with that as well. In any case, I'm Ira Epstein. You have yourself a great day. I will talk to you all first thing in the morning tomorrow. I will be in California a little bit longer, traveling back midweek next week. You take care.